Now, Mr. Draghi must have a big, smug smile on his face right now. Konrad Busen is at the European Central Bank in Frankfurt, standing by for us. Konrad, how quickly do you think the ECB will consider raising interest rates or at least scaling back the ultra-generous monetary policy?
Well, Gerhard, I'm sure that Draghi, sitting on the top floor of this building right behind me, has this smile on his face, but it's not likely that he is sitting there anxiously waiting to act. You know, monetary policy makers look at inflation data because it's a measure for economic dynamics. And this consumer price increase in December has mostly to do with a rise of energy prices. The oil price, remember, rose quite steeply in December. The so-called core inflation rate has not risen accordingly, which means that companies are not in the position, generally speaking, to simply pass on higher energy prices onto their consumers. And that's a sign that, yes, the economy has continued to improve in the Eurozone, but not very much yet.
On the other side of the Atlantic, the Fed has said that rate rises are to be expected. Are we going to see that this divergence between Europe and America in terms of interest rates is going to widen?
Absolutely. As the protocols of the last Fed meeting, which just came out, show the Fed's monetary policy makers are quite aware that the economy in the US this year has the potential to rise and grow more quickly and more strongly than anticipated until recently. And that makes it more likely that we are going to see higher interest rates in the US soon. Today and tomorrow we'll be getting new data from the US labor market, very important indicators for the US economy and data that everyone on the markets will be focusing on.
Konrad Busen there outside the ECB in Frankfurt. Thank you very much.